What's up, everyone? It's Scotty with MoneyVest. So today we are going to be talking about super microcomputers, ticker symbol SMCI. I did a video on this company first time back in February of earlier this year, 2023. And since then, of course, the stock has been on this ripper rally up over 250%, and now trading well over $255. It was up to as much as $357, but it has pulled back considerably from those levels. So we're going to break down the earnings because they did report the first quarter fiscal year 2024 earnings on November 1st. We're going to break down everything you need to know. We're going to run through our discounted cash flow, reverse discounted cash flow, and the discounted earnings multiple models to better figure out what's the intrinsic value for this business and what's going to be the appropriate level to watch from a technical support and resistance levels. So hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only benefits, including the intrinsic value spreadsheets, trading view charts, members only videos, trade alerts, Discord channels. Everything's going to be included. I did open up a few more spots, so links are going to be down below if you're interested in joining us. So first things first, let's talk a little bit about the price action. It has obviously been on an insane rally since, let's say, April of 22. It's up over 700%. But from earlier this year, from January of 23, the stock's up over 270%, and year to date it's up over 200%. So it's obviously done really, really well. Congratulations to anyone who's been trading or investing in super micro. But for the most part, more recently, it's been consolidating sideways, almost an identical pattern and a chart to NVIDIA. If you take a look at NVIDIA, same exact thing. It doesn't even feel like there's a lot of difference, right? NVIDIA, take a look, going up, going sideways. SMCI, same exact thing, going up and then going sideways, right? It's identical. So we're going to break down the earnings here. So this is the revenue, $2.12 billion, up 14% year over year, and continued record demand for AI-related systems at rack scale. First to market with the NVIDIA GH200 Grace Hopper and Grace Super chips with early shipments. Announced support and early access for the 5th gen Intel Xeon processors, complete family of X13 servers. Released several AMD solutions and released E1.S and E3.S all-flash storage solutions. So they do work with a lot of companies, right? NVIDIA, Intel, AMD. I did that. That was part of the thesis that they have partnerships with AMD and NVIDIA when we talked about this company back in February. And executing our strategy, and second quarter fiscal year 24 revenue guidance of $2.7 to $2.9 billion. It's a 50 to 61% growth on a year-over-year basis. So that's exactly what Wall Street likes to see, is the tremendous amount of growth that's coming in. And you can see that SMCI's growth versus the industry has been very, very elevated, although it has seen a little bit of those economic headwinds coming down with the growth rates. And then once again, they've accelerated, but now they're coming back down. So that's one of the things that I think is risky for growth stocks, is the slowdown in the growth rate, which could lead to multiple compression. Now, thankfully for SMCI, it still doesn't trade at these ridiculous multiples. If anything, it actually still trades at quite reasonable multiples. I'll go over that in just a minute. But revenue number, $2.1 billion, up 14% year over year. Gross margins, non-GAAP 17%. Now, margins have been going down for the company as they have started to focus a little bit more towards market share gains, and earnings per share coming in at $3.43, slightly up on a year-over-year basis, and cash flow from operations $271 million, down year-over-year but up quarter-over-quarter. And this right here is going to be the revenue mix. So majority of the revenue is still coming from the US, 76% coming from the US, and Europe accounts for 9%, Asia accounts for 11%, and other markets are about 4%. So still a very strong revenue contribution coming from the United States, and China is about 2% of the total revenue as well. But non-GAAP gross margin sitting at 17%. They mentioned that the focus is now on market share gains, and that's one of the reasons that why the non-GAAP gross margins is coming down. Now, when it comes to the net cash position, $397 million, so almost $400 million more cash than debt on the balance sheet, and free cash flows sitting at $268 million as of the most recent quarter. And this is about a 12.6% free cash flow margin for the company. Total debt was down by $144 million. Total cash is $543 million. So they are looking at a net cash, like I said, of almost $400 million, and the free cash flow margin is about 12.6%. We'll use that number to account for the free cash flows for the entire year, fiscal year 24, when we're forecasting for this year. Now, when it comes to outlook, they are expecting full year revenues of 2024 between $10 and $11 billion. So if we come over to the company's 2023 numbers, you'll notice that they did 7.12 billion, right? So 7.12 billion. And that is going to be 10. Let's just take the mid guidance of 10.5. So we're doing 10.5 divided by 7.12. We're looking at a 47% growth in revenues for the company. And if you expect somewhat of a margin expansion of, let's say, 10%, that's going to be about $1 billion, right? So 1 billion divided by last year's earnings of about 640, so 6.64, we're looking at a 56% increase. So this year in 2024, the expectations could be for a 56% earnings growth and a 40+% growth in revenue, which again is very strong for the company with a negative net debt. That was some of the things that definitely did attract me towards SMCI, because the valuation was low. So there was a little bit of that dislocation in the company. And even right now, if you take a look at 22 times earnings and market cap's of $13.4 billion, right? So if they're going to do $10 billion in sales and they're trading at 13.5 billion, that's a little over 1 time sales, which again is quite low. And if they're going to do $1 billion in, let's say, profits this year, that is still at 13.5 times earnings multiple, right? So you could argue that even after the significant amount of multiple expansion and the increase in the stock price, one could argue that SMCI could still be a good deal at these prices. Now, again, if the growth rate starts to slow down in the future, if there are any potential headwinds, competition, all of that is still going to be valid, because a lot of these companies, they trade on high growth, right? If there's high growth, like I said, 40% plus growth in revenue, 50% plus growth in EPS, if that high growth starts to come down, then Wall Street's going to not like it anymore, right? They're going to reprice that. That's happened with so many stocks. I mean, countless of companies have gone through this cycle of going up and then coming back down because the growth rate started to slow down. So that is something that we have to obviously be aware of. That is a risk of SMCI, but at the same time, it's trading at quite a reasonable forward, valuation that it doesn't it's not going to have a significant risk of that multiple compression. I mean, it's already a 13.5 times earnings multiple, right? I mean, how much lower is it going to go? When we started looking at it, it was trading at closer to 7 or 8 times earnings. So, it's obviously more than doubled since then. And it's now trading at over 22, but that's also on a trailing basis. So that's where we are. But if you plug in some of the numbers from a discounted cash flow model, so we're going to put an SMCI over here. And if you do the math, 10.5 times 0.126, because that's the 12.6% free cash flow margin, we're looking at $1.3 billion of free cash flow. So 1323 is what I'm going to plug in over here. So 1323. And now if we plug in, let's say, growth rate of, we're going to do 0% share dilution. Let's just take a quick look on what the share dilutions look like for the company in the past. So statistics, we're going to come over here. On an annual basis, they've gone from 49 to 53 million. So they have increased the share count by just a small amount. I'm just going to plug in, 0.5% over here. And if you take a look, I mean, this is just ridiculous, right? Even if they grow the free cash flows by 10% over the next 5 years, and we give them a 12% discount rate, 3% terminal growth rate, and a 10% margin of safety, SMCI still, one could argue, is undervalued by 31%, and the estimated fair value would be $333, right? It's quite interesting because the growth rate has been so strong for this company, right? It's only 10% free cash flow growth, right? It's down. It would be down from like significant levels. And even if you do, let's say, 8%, right? Let's try to figure out, okay, what does SMCI need to do in order to justify today's valuation, right? So we're looking at 4% free cash flow growth, 2% terminal growth, 10% margin of safety, almost 0.5% here share dilution. And even then, we're looking at the price to be trading at its intrinsic value, right? It's incredible how sort of low valuation this stock's trading at. And this right here has been the free cash flows. Now, 2022 was negative, 2023, 626 million. So 2024, the assumption here that I'm making is that it's going to be closer to $1.3 billion. But even if you account for, let's say, a little bit of a lower number, let's just do 1 billion over here. And then let's just up this number to 6% or 8% and terminal growth rate of 3%. Now, again, we're starting to get into that territory of, okay, 10% growth rate for free cash flows, 3% terminal, and that's where the intrinsic value sits, exactly where the price is. Now, if you do a very similar analysis on the profitability, so if let's say the profits are going to be 10%, which is going to be close to $1 billion. So we plug that number in, and we assume, let's say, a 10% growth rate for the actual profits, and PE multiple, right? Let's just say 18 is going to be a little bit lower than where they're trading right now at 22. So a little bit of that multiple compression, 12% discount rate, 10% margin of safety, and 0.5% in share dilution. Now we're looking at $273, right? So still makes SMCI quite an interesting opportunity, an interesting stock to further look into. But of course, a lot of it is hinging on the idea that, okay, free cash flows and profits are going to be close to $1 billion this year in fiscal year 24. They're definitely off to a great start, and the growth rate is going to be a modest 8 to 10% for free cash flows and earnings. So I'll definitely keep a close eye on this. It's not a stock. Yes, it does check off a lot of the boxes. But I still do feel that can they actually grow at close to $1 billion? Because if the growth starts to slow down, even if SMCI, could be, let's say, undervalued at these prices, if the growth starts to slow down, the Wall Street will get spooked and it will start to create that environment of aggressive selling pressure, right? Same thing, is with Enphase, because a lot of these companies can be undervalued and still not be loved, right? That happens on Wall Street all the time. For example, PayPal, Enphase, a lot of them can indeed be undervalued based on the calculations, but they still may not catch a lot of momentum or may not catch a lot of interest of Wall Street or institutions because of the growth rate slowing down, right? Enphase, PayPal, these are companies that are growing. They're still doing really well on a year-over-year basis. Their financials are strong, but the fact that they're still down substantially just goes to show that Wall Street focuses very much on bottom line profitability, bottom line margins, and more importantly, the growth rates at which they're growing. So SMCI does have that growth compression risk where if the growth rate starts to slow down, that creates a lot of volatility on the downside. But the bottom line is that's only going to make the valuation a lot more appealing at those prices. The lower the better, right? The lower the price comes, the better the risk reward becomes. So from a technical analysis standpoint, I'll be keeping a close eye at a few support levels here at $220. If it does end up breaking down below this level, although we are making a little bit of that sort of descending triangle as well with these lower highs. So if you do end up breaking down below this, we've got a gap to fill over here. And the next support level to watch for SMCI is going to be closer to $120. When it comes to some of the moving averages, so if I bring up the 200 SMA, that's going to be sitting roughly at around 196. So anything sub $200 would also represent a pretty solid opportunity. And of course, right now we're just consolidating sideways on that 50 exponential moving average. So those right there are going to be some levels to watch at 196, sub $200 support with the 200 SMA, all the way down to $120. It's going to be on the list here. I will definitely put it on my watch list, and we'll be constantly watching the risk reward, the technicals, the growth rate, and then eventually make a decision. Of course, alert everybody in the Discord as well. So again, if you want to join our MoneyVest community, links to our Discord Patreon is going to be down below. We'd love to have you on board. Let me know your thoughts down in the comment section below for Supermicro Computer. Still a high growth company trading at quite a reasonable valuation with a very strong balance sheet and little to no dilution. But the growth rate, that's the lesson that I've learned over the last couple of years, is that Enphase, PayPal, a lot of these companies, when you compare them, okay, they could be undervalued, but if the growth rate slows down, they can still come under a lot of pressure from institutions. So hope you guys enjoyed this video, found it helpful. As always, happy investing. I'll see you all in the next video.